if you have a very kind relative or a very generous uncle,
Yeah.
hopefully they can help you out. But if you have all the money yourself, as long as we verify it and it's enough to close, like you said, you're golden.
Hey everyone, welcome back to another show. My name is Jonathan Cabrera. I'm your local realtor with Better Homes and Garden Van Realty. This is the Let's Talk Real Estate with Jonathan Cabrera. Today I have the pleasure of being with George Pejoves. He's with Hudson United. He's a mortgage loan officer, but more importantly, he's a banker servicing New York, New Jersey, Connecticut. George has 30 years in the business, with originating nearly $1 billion to home buyers. George, welcome to the show.
Thank you, Jonathan.
Thank you for being here.
Thanks for having me.
Cool. So, real quick, I know I just gave you an introduction, but is there anything else you want to add to this to let everybody else know who you are and what you do?
Sure. Well, as a mortgage banker, we're also mortgage brokers, which allows us to also find other sources that may not be typically a conventional source. So if one of your buyers has a very unusual situation, employment situation, very often we have other lenders or investors available that we work on a broker basis. As a banker, we basically fund the loan, and then, like most bankers, they sell the note later to another investor.
Right.
So it's important for buyers to know that because it's a real big benefit. When you apply at a big box bank, as I call them, you're tied in typically to their lending policies and their rates. With us, we have an array of lenders that can serve your client really pretty much for anything they need.
Awesome. That's pretty cool. It's actually interesting to know. So being in the industry now for 30 years, where are the interest rates? Where do you see the interest rates, past, present? What are you thinking about the interest rates?
Well, talking about rates is a tricky question because when you rates are a moving target. Okay, an interest rate on a mortgage is pretty much like a stock. When you lock in an interest rate and you close your loan, that instrument is a sellable instrument. It gets sold to Fannie Mae and Freddie Mac. So if you lock in an interest rate at 4.5%, that has a certain value. So when people are calling me and they say, "What's the interest rate?" it's important to find out where they are in the process, because if they're nowhere even near finding a property, it's important to know, to basically give them a guidance by saying, "Hey, here's a range of rates that have been happening for the last 6 months to a year. I can't predict where rates are going to be next week or next year. Sometimes there's a trend, but typically we want to give them an idea so that way they know what their affordability factor is. Today's rates, I can quote you a rate today, and tomorrow they could go up an eighth or a 1/4%, or it could go down.
Right.
So right now the trend, for the last 4 or 5 months, we're right now in January 2019. Happy New Year, everybody. Rates have been sliding up because we have been in a very low rate market due to having the government's help in building up the economy. And now that things are relatively going well, the Federal Reserve has been raising interest rates. They're not high. The rate range is typically right now between 4.25% and 4.75%, depending on your credit score, how much you're putting down, the type of program. So there's a lot of variables on rates.
Got it. Cool. Sounds good. All right. So we explained real quick how the interest rates, pretty much what the trends were. Next, George, I want to ask, what's the buying process and how has that changed over the years?
That's a great question. I think, today's mortgage market is not your father's mortgage market, as I like to say. In the last 10 years, things have changed dramatically. Since the mortgage meltdown or housing debacle, whatever you call it, of 2008, the government stepped in and created new rules for lenders, which I think are terrific. It weeded out a lot of people that shouldn't be in the business, and it somewhat leveled the playing field for all lenders. Process in many ways in the beginning was tougher. They were practically, they were looking under everything, asking you every which way, where your money came from, how your job is, where, what you do, how much you earn, everything to the ninth degree. Now it's leveled off a little bit, but they still do have, the process is a little more stringent. There used to be a no income verification that really no longer exists. So you have to really prove that you can afford the house.
Right.
They'll look at your debt. They'll look at your employment. They want to make sure that your loan is going to perform, meaning that the odds are you're going to pay it on time. So as far as the process individually, in many ways, some improvements are owed to technology. So today, you contact me, I can have your loan pre-approved within hours. And take your information, run it through our software, have a letter for you within an hour or two, and then if I collect all the documents, I can take your information, if everything works out well, and you actually earn what you say you do, and have the income, have the assets that you say you have, and that can be proven, we can have a commitment for you within a few days. Okay?
Yeah.
I've closed loans in 3 weeks. What takes the longest is typically the title, negotiating the contract, getting your homeowner's insurance, and making sure everybody's schedule is on the same page, so that way you can get to closing quickly.
Yeah.
But process is a lot easier. The review of your information and the documentation is a little more stringent.
Got it. Now, I want to ask you real quick. I've heard of 4 C's in lending.
Mm-hmm.
So I want you to talk a little bit about that. But before I do, I kind of want to give you guys, just to touch base on what he just said. The fact that he can give you a pre-approval within an hour is important, especially within our market right now, because we have low inventory, and the people who are out shopping, they're making decisions quick. So the fact that we can get George on the phone and within that hour have that pre-approval just means that right there on that spot, I can go ahead and make that offer for you. And when I get back in the office, have the pre-approval, send it out, and we're golden. So you don't lose the opportunity on that house to be able to buy it. So that's actually a pretty good thing that you can do that.
Well put.
Yeah, so let's go ahead and talk about the 4 C's in lending. What's that all about?
4 C's: collateral, cash, capacity, and credit. Okay, not necessarily in that order, but collateral is really your property. Now that when you're buying a house, you have very little control over. The value is what the value is going to be. The condition is important of the property. The next part is capacity. Capacity is your ability to pay the loan. I'm going to verify your income, that you earn enough to pay the loan, compared to, we take into account your debt, the new mortgage loan, the income, the taxes, the insurance, and we take that and divide it into your monthly income. And we have a ratio that we look at, and if the ratio is within the guidelines, you're approved. So after capacity is you have cash. Cash is simply savings. How much cash you have available, where is it coming from? Gifts from relatives are allowed. If you have a very kind relative or a very generous uncle, hopefully they can help you out. But if you have all the money yourself, as long as we verify it and it's enough to close, like you said, you're golden. The other C is collateral. We said cash, credit, capacity, and
credit.
Thank you. Credit. Credit is the last C. We want to make sure your credit is doesn't have to be impeccable. We all have problems, we all sometimes miss a payment. So we go with credit scores as low as 550, sometimes even 500, but you're typically going to pay a little bit more on interest rate. But typically, you're looking for a decent credit score over 680. 680 to 800 is considered good to excellent.
Right.
So, those are the 4 C's typically.
Cool. So lending-wise, at very least 500 in terms of credit scores, right?
Under 500 is almost impossible.
Okay.
With 500, typically you'll have to put maybe 20% down,
Right.
and you're going to pay for it a little bit in the interest rate.
But yeah, that's kind of why
Yeah.
that's kind of why I asked that question, because I wanted to lead into down payments. I know we didn't have it, but it just came to mind while you're saying this. What's the, because everybody has this thought that you need 20% down. Is that true? Like, do you really need to have 20% in this day and age now to be able to buy a house? You have to put 20% down.
Well, you may not need it, but sometimes it's required if one, you need down that much down to qualify, or two, you want to avoid mortgage insurance. Mortgage insurance is required if you're putting down less than 20%. Sometimes you'll hear about this no PMI loans. They're self-insured loans, so you're paying a little bit more on the interest rate without paying the mortgage insurance per se. But you can go with as little as 3% down on a conventional Fannie Mae loan, 3.5% down with FHA. So you can go, if you're strapped for cash, you can go with a low down payment, but you do have to qualify for the larger loan.
Right.
So, action, reaction. So
right.
That's what it is.
All right, so George, we got the buyer stuff out of the way. Now let's talk sellers. How can a seller, or what role does a seller play into the transaction to make it go smoothly?
Well, that's a great question, and typically 9 out of 10 times a seller has very little role, if any at all, with the buyer in regards to the buyer's bank. However, a seller can, if they want to sell their property quickly or stand out among the throngs of listings out there, something that's very popular is called a seller concession. It means that a seller can participate in the buyer's process or success in getting the house. Meaning that, let's say you have a buyer who has, maybe 10% down, has little down payment, but has great credit, has great capability, great capacity to pay the mortgage, but is a little short on closing costs. So typically in New York, you have to pay a full year's taxes and then your closing costs. And so then let's say they're $5,000 short, and your seller has a $400,000 home. They're willing to sell the house at $400,000, maybe even take $390,000, except $390,000. So very often, what they can do is sell the house at $395,000 or $400,000, and if the house appraises at that seller can contribute $5,000 or $10,000 to the buyer for their closing costs. Okay. Now they're basically saying that the house is worth $400,000. I'm willing to accept $390,000. I'll sell it to you at $400,000, and I'm willing to donate up to $10,000 towards your closing costs to help you close. So that is totally legit. It's part of the guidelines and can allow a buyer to go through the process a lot smoother.
Awesome. That's awesome.
Right.
Yep.
But the other thing is the seller. Other than that, really, it's important that the seller's agent know that the loan officer that they're working with in the outfit is reputable and can get the job done. So I think that's critical. Very often buyers apply at a very unknown, out of state sometimes outfit, and since they don't know the area or they're not accountable to the people in the area, not only the buyer but everyone involved, sometimes things don't go as smoothly. So it's important that the seller and the seller's agent know who the buyer is using as their bank, so it doesn't cause delays or problems.
Oh, that's awesome. Yeah, that's very key to the entire transaction.
Exactly.
But George, listen, I know your time is valuable.
Oh,
thank you for doing this with me. It was a pleasure, sitting down here with
Jonathan,
you.
It's always a pleasure to be on the Jonathan Cabrera show.
Listen,
Okay.
Real quick, are you on social media?
I am.
Cool. Just let them know where they can find you, where they can reach you at, so
Sure.
that way, if they are interested in loans.
George Pejoves, Mortgage Professional. You can look me up on Facebook at Geo Pejoves. That's Pejoves. See you then.
Also, make sure you follow me on my social media channels as well, because I will be doing some live Q&As and just having conversations with people who follow me. If you like this video, please comment below. Let me know what your thoughts were. I'd love to hear your feedback, whether the video was too long, too short, not enough information. I'd love to hear that feedback just so I can make better ones for you on the next one. Thank you guys for spending this time. Hope you liked it. Give it a thumbs up if you did, and I'll see you next time.